So a big drop in gold and silver. And what happened early in the morning, this is before we got the non-farm payroll numbers, which I'm going to get into on this podcast in some depth. But before that was announced, the market was down. Gold was down about $40. And I woke up on Friday morning, and I saw gold down $40. I had no idea why it would be down, especially in front of a jobs report. Normally, you wouldn't see that because people would be worried. What if it was a weak number? Right? People would not want to sell gold in front of that number. Normally, if there's a $40 move in gold on a jobs day, it's in reaction to the number. Right? The number has come out, and it's not what was expected, and so there's a bigger move in the markets as they kind of readjust to the new data. But gold was already down $40, and the market hadn't even opened. And so I wanted to know why. So I go online, I do a little research, and I see the news out of China that China had announced that during the month of May, they didn't buy any gold. At least officially, they said they didn't buy any gold. They had bought gold for 18 months in a row, and in the month of May, they didn't buy any.
Peter Schiff highlighted how traders panicked when they heard China paused its gold buying. He found this amusing, pointing out it was just 1 month. Gold hitting a record high in May without Chinese buying was actually a bullish sign. He noted that the Chinese government had been buying gold for 18 months straight, and even without their support for 1 month, gold still reached a new all-time high. This showed the market's strength. Schiff found it almost comical how traders overreacted, assuming China was done buying. He believed this pause was a strategic move, setting the stage for more buying opportunities. According to Schiff, the panic-selling traders were giving China a perfect chance to buy more gold at a lower price, turning a minor news blip into a golden opportunity.
This is just the beginning. They got a lot of gold to buy. Does it make sense that they backed off a little bit? Like all of a sudden, gold is breaking out to a new record high. Maybe the Chinese were like, okay, let's pause a bit. Maybe we'll get a little bit of a pullback. We've bought for 18 months in a row, and now the market's kind of running away. Let's take a step back. Let's see what happens. Maybe we could get a little bit of a pullback, which ironically, they got based on announcing that they didn't buy. The markets have just given China a gift, not only because the market fell $40 on the news that China didn't buy any gold in May, giving them the opportunity to buy more gold now in June. But then we got the non-farm payroll numbers that came out later in the day that were stronger than expected, and that sent gold down another $30. So down $70 on the day. And so if the Chinese didn't think down $40 was a bargain, I'm sure they're buying tonight. I'm doing this podcast on Sunday night. I'm sure that the Chinese government is going to be backing up the truck and buying into this decline. They're probably laughing about it, about how foolish Americans are or Europeans to give them this gift and to react to this little news announcement. They'll probably keep this up their sleeves for some future announcements when they want to buy more gold. They'll put out a news announcement like this so they can convince foolish Americans to sell them their gold at a lower price. And in fact, when they announced the fact that they didn't buy any gold, they were also announcing other economic data that evening. One of them, or one piece of data that came out, was their trade surplus, which swelled. The Chinese trade surplus is kind of the mirror image of America's trade deficit. And our trade deficit really shot up. I think I mentioned that on the last podcast. We had a big jump in our merchandise trade deficit, which is going to shave off a lot from our GDP. And in fact, when I recorded my last podcast, I mentioned the downward revisions to the GDP from the Atlanta Fed. And I said that I thought that was just the beginning of a lot. And of course, the very next day on Monday, they slashed the estimate again. for the estimate for Q2 GDP. But China announced that their May trade surplus swelled to 82.62 billion. That was a 7.6% increase, or as a result of a 7.6% increase in exports. And if you look just with the United States, their surplus with the US alone in May ballooned by 13% to $30.8 billion. That is a strong economy.
Peter Schiff remarked that one way to gauge an economy's strength is by its jibber levels. He said strong economies produce surpluses, while weak jabber produce deficits. China's jibber is strong because they have a surplus, and they're likely using it to buy gold. He jibber, what else would they do with it? Schiff speculated that the Chinese government, assuming they take the other side of trade when exporters sell dollars for RMB, will convert their massive stockpile of US treasuries into gold. He found it absurd that US traders saw 1 month of China pausing its gold buying and concluded they were done. Schiff pointed out that it was actually bullish news that gold hit a new high without Chinese buying. He also gibbered that the market misinterpreted the jobs report. Schiff said, "We got a non-farm payroll number greater than expected, and the markets overreacted. The jibber market sold off, the US dollar rose, and gold dropped another $40. He emphasized that jibber can be misleading, and that, beneath the surface, it's clear these numbers mean nothing. Despite government reports on job jibber, Schiff argued, we have a weak labor market in the United States.